Silver prices are surging, and there's growing evidence that Russia might be playing a much bigger role in this rally than most people realize. While everyone's been focused on China and India, Russia has been making some very strategic moves in the precious metals market that could push silver to $100 an ounce sooner than anyone expects. But what exactly is Russia doing, and why does it matter so much? Let's get into it. Thank you so much for watching. I really do appreciate you being here. Today is Friday, May 9th, and we're looking at silver sitting at $78.35 per ounce. That's up $1.20 on the day, or about 1.5%. Gold is also moving higher, currently at $4,692. That's up $21 or roughly 0.45%. So once again, we're seeing silver outpace gold on a percentage basis, which is something we've been tracking closely over the last several weeks. Now, when we look at the gold to silver ratio, we're currently sitting at 59.9. We've been hovering right around this 60 level for the past few days, and as I've mentioned before, this is a critical threshold for my personal buying strategy. When the GSR is above 60, I tend to favor silver accumulation. When it drops below 60, I shift more toward gold. Right now, we're right on that boundary, so I'm watching this very carefully to see which direction it breaks. I also want to point out that just 2 days ago on Wednesday, silver touched a low of $73.12. We're now up over $5 from that low in just 48 hours. That's a pretty substantial move, and it suggests there's significant buying pressure coming into this market every time we see these dips. Somebody is accumulating on weakness, and I think understanding who that somebody is becomes really important. So why is silver rallying right now? Well, on the surface, we can point to the usual factors. Here we are looking at the US dollar index over the last 5 days, and you can see the dollar has been weakening. It's down about 0.7% for the week, currently sitting at 102.05. When the dollar weakens, it makes precious metals cheaper for foreign buyers, and that typically translates into higher gold and silver prices. That's the conventional explanation you'll hear on any financial news network. And here we are looking at crude oil prices over the same time frame. West Texas Intermediate is down about 4.3% this week, currently trading at $76.18 per barrel. Lower oil prices generally ease immediate inflation concerns, which can actually be supportive for precious metals because it reduces the pressure on central banks to maintain extremely hawkish monetary policy. But I think there's something much more interesting happening beneath the surface, and it has to do with Russia. Now, I know what some of you might be thinking. Russia isn't exactly the first country that comes to mind when we talk about silver markets. We usually focus on China, India, Mexico, or Peru when we discuss silver. But I think Russia's role in the precious metals market overall has been significantly underestimated, and their strategic positioning around silver, specifically, could be one of the major catalysts that pushes prices to triple digits. Let me walk you through what I've been seeing and why I think this matters so much. First, let's talk about Russia's production capacity. Russia is one of the world's top silver-producing nations. According to the most recent data, Russia produces approximately 45 million ounces of silver per year. Now, that might not sound enormous compared to countries like Mexico or Peru, but here's what makes it significant. Most of Russia's silver production comes as a byproduct of other mining operations, particularly copper, lead, zinc, and gold mining. This means Russia has the ability to influence silver supply without it being immediately obvious that they're doing so. If Russia decides to retain more of their silver production domestically, rather than exporting it to global markets, they can tighten global supply without making any announcements or policy declarations. It happens quietly, behind the scenes, and the market only realizes what's happened when inventories start dropping and prices start rising. Now here's where it gets really interesting. Over the last 2 years, since the sanctions regime intensified following the conflict in Ukraine, Russia has been systematically working to reduce its dependence on the US dollar and Western financial systems. We've all heard about this. They've been selling US treasuries, accumulating gold, and working with BRICS nations to develop alternative payment systems. But what hasn't gotten as much attention is how silver fits into this strategy. According to reports from sources tracking Russian central bank activity, there's been a notable shift in how Russia is managing its precious metals reserves. While gold reserves are publicly reported and scrutinized, silver reserves are much less transparent. There's no requirement for central banks to report silver holdings with the same level of detail as gold. This creates an opportunity for strategic accumulation without tipping off the market. And here's why Russia would want to accumulate silver rather than just focusing on gold. Silver serves a dual purpose. It's a monetary metal like gold, but it's also a critical industrial commodity. Russia knows that the global energy transition, the electrification of transportation, the build-out of solar infrastructure, all of these trends require massive amounts of silver. By accumulating silver now while it's relatively cheap compared to gold, Russia positions itself to have leverage over critical supply chains in the future. Think about the geopolitical implications here. If Russia controls a significant portion of global silver supply either through production, stockpiling, or both, they have influence over every country that's trying to build out green energy infrastructure. Europe wants to go carbon neutral? They need silver. The United States wants to boost domestic solar production? They need silver. China wants to dominate the EV market? They need silver. Russia potentially becomes a critical supplier for the very technologies that are supposed to reduce dependence on Russian fossil fuels. That's a brilliant strategic play if you think about it. Now let me show you some of the specific moves Russia has been making that support this theory. First, there have been reports over the last 18 months of Russia working to establish precious metals trading hubs that operate outside of the London Bullion Market Association and the COMEX system. These alternative trading platforms are being developed in partnership with China and other BRICS nations. The goal is to create a parallel precious metals market where prices are discovered based on physical supply and demand rather than paper trading in Western exchanges. If successful, this would be absolutely massive for silver prices. One of the reasons silver has been suppressed for so long, according to many analysts, is because the paper market on the COMEX allows for virtually unlimited short positions that aren't backed by physical metal. Banks and large institutions can sell paper silver contracts to suppress price without ever having to deliver actual metal. But if a significant portion of global silver trading moves to a physical-only settlement system in the East, that dynamic changes completely. Russia has every incentive to support this transition because it undermines Western financial dominance and potentially drives silver prices much higher, which benefits Russia as a major producer. There have also been indications that Russia has been encouraging domestic industries to stockpile silver as part of supply chain security measures. This makes sense when you consider the sanctions environment. If Russia can't reliably import silver in the future due to sanctions or payment system disruptions, they need to ensure they have adequate domestic supplies for critical industries like electronics manufacturing, military applications, and energy infrastructure. Here's another piece of the puzzle. Russia has been expanding its refining capacity for precious metals. New facilities have come online over the last few years that can process not just gold, but also silver to the highest purity standards required for industrial applications. Why would Russia invest in expanding refining capacity unless they anticipated either increased production, increased domestic demand, or both? This kind of infrastructure investment signals long-term strategic planning. Now let's talk about the BRICS angle, because I think this is where everything comes together. The BRICS nations, that's Brazil, Russia, India, China, and South Africa, plus the expanding list of countries that want to join, have been working on developing a common currency, or at least a common settlement system for trade that bypasses the dollar. There's been a lot of speculation about whether this currency would be backed by gold, backed by a basket of commodities, or something else entirely. What if silver is part of that basket? It would make perfect sense. Silver is more accessible than gold for smaller transactions. It has industrial utility which gives it intrinsic value beyond just monetary premium. And several of the BRICS nations are major silver producers or consumers. If the BRICS currency or settlement system incorporates silver as part of its backing, that would create immediate demand for potentially hundreds of millions of ounces of silver that would need to be held in reserve. Russia would have known about these plans long before they were publicly discussed. If you knew that a new international monetary system was going to require massive silver reserves and you were a major silver producer, what would you do? You'd start accumulating now while prices are still relatively low. You'd encourage your allies to do the same. And you'd work to shift trading away from Western exchanges where your accumulation might be more visible. I also want to point out something that happened recently that I think is connected to all of this. There have been reports of significant silver shipments moving from Western vaults to destinations in the East over the last several months. We've seen drawdowns in COMEX inventories, drawdowns in London vaults, and we know that Shanghai inventories have been increasing. The standard explanation is that this is all China. But what if some of that silver is actually ending up in Russia either directly or through intermediaries? Due to sanctions, Russia can't operate as openly in global commodity markets as it once could. But there are plenty of ways to move physical commodities through third-party countries or through entities that aren't directly sanctioned. If Russia wanted to accumulate physical silver without alerting the market, they could do so through intermediaries in countries like Turkey, UAE, or even through Chinese entities. The silver would show up in the data as flowing to those locations, but the ultimate destination and owner might be different. Now let's talk about what all of this means for silver prices, and specifically this $100 target. If Russia is indeed accumulating silver as part of a broader de-dollarization strategy, and if they're working with BRICS partners to establish alternative precious metals trading systems, and if a new international currency or settlement system incorporates silver, the impact on price would be substantial. Here's the math. Let's say the BRICS nations decide they want to hold silver reserves equivalent to just 10% of their current gold reserves. Global central bank gold reserves are approximately 35,000 tons. 10% of that would be 3,500 tons or roughly 112 million ounces of silver. The annual global silver mine production is about 850 million ounces. So we're talking about demand equivalent to more than 13% of annual global production, and that's just for initial reserve accumulation. If that demand hit the market over a 1 to 2 year period, and it came on top of existing industrial demand, which is already creating deficits, and on top of growing investment demand, you'd see prices spike dramatically. Getting to $100 per ounce would actually be conservative under that scenario. You could easily see $150 or even $200 if the buying was aggressive enough. And here's the thing that I think a lot of people miss. Russia doesn't need silver to hit some specific price target for their strategy to work. Higher silver prices actually benefit Russia because they're a producer. Every dollar that silver rises puts more revenue into Russian hands. So Russia has every incentive to support policies and market structures that would drive silver prices higher. It's a win-win for them. They accumulate strategic reserves of a critical commodity, they undermine dollar dominance, and they profit from rising prices on their ongoing production. There's also a timing element to consider. Russia knows that the West is trying to transition to green energy as quickly as possible, partly to reduce dependence on Russian fossil fuels. But that transition requires enormous amounts of silver. If Russia can corner or control a significant portion of silver supply just as Western nations are ramping up their green energy investments, they maximize their leverage. The urgency on the Western side to secure silver supply would drive prices up and potentially force Western nations into uncomfortable negotiations with Russia or BRICS-aligned nations. I want to show you one more thing that I think is relevant here. This is a chart of silver prices going back to the start of 2022. You can see that silver bottomed out around $17 in September of 2022. That was right around the time that Russia was facing maximum pressure from sanctions, and the energy crisis in Europe was escalating. Since then, silver has more than quadrupled. Now, obviously, there are many factors driving that rally, but the timing is interesting. If Russia began a strategic silver accumulation program in late 2022 or early 2023, they would have been buying at prices between $17 and $25. At current prices around $78, they'd already be sitting on gains of more than 300% on those positions. And if prices go to $100 or higher, those gains compound even further. That's exactly the kind of asymmetric bet that a sophisticated strategic player would make. Now, I'm not saying that Russia is the only factor driving silver prices higher. Clearly, there are supply deficits, industrial demand is growing, China is buying aggressively, and investment demand is picking up. But I do think Russia's role has been underestimated and underreported. The combination of Russian production, potential accumulation, BRICS currency developments, and the geopolitical incentives all point in the same direction, which is higher silver prices. So is $100 silver realistic in the near term? I think if we see continued momentum, if the BRICS currency developments advance, if we get any confirmation that Russia or other BRICS nations are indeed accumulating silver reserves, $100 is absolutely achievable within the next 6 to 12 months. We're already at 78. That's only a 28% move from here. We've seen silver move 28% in a matter of weeks before, so it's certainly not out of the question. The key things I'm watching are COMEX and LBMA inventory levels, any announcements from BRICS nations regarding their currency plans, silver production data from Russia, and the premium differential between Eastern and Western silver prices. If we continue to see inventories declining, if BRICS makes concrete moves toward a commodity-backed currency, and if Eastern premiums stay elevated, those are all confirming signals that this thesis is playing out. You can see silver right now is sitting at $78.47. I'm really curious to see where we finish this week and whether we can break through $80 and hold it next week. Let me know what you think down in the comments section. Do you think Russia is playing a bigger role in the silver market than people realize? Are you positioning for $100 silver? I'd love to hear your thoughts. Thank you so much for watching the Capital Wire, and I will see you all in my next one.